Break down really quickly the Reaper inverse fair value gap. This is an ICT concept that I was introduced to maybe 7, 8 months ago. But yeah, without further ado, we're going to use a real example off of NQ's recent action. This is Wednesday, June 26th. So let's go ahead and dive right into the charts. Starting out with the daily chart, what I want to go over is just the last couple days, just to kind of build a context of what we were looking at. So heading into the week, we had this steep sell-off from last week. And from there, the next logical target was going to be some form of internal range liquidity. So we had these relative equal lows marked out, which also overlap with this gap right here. So these are the few levels that we're looking at. I'll go ahead and throw this magnet on just to get everything all nice and tight. So heading into today, Monday had tagged that level. Tuesday had barely taken out the previous day low. And then Wednesday, we were opening, near the highs of Tuesday. So the only other level that we have from the daily chart perspective is going to be Friday's low. And I'll show you why in a second. The general idea is that old highs and lows can act as premium or discount arrays depending on the context. So if we're closing above an old daily low, you can see as to why that might be an easy level to reclaim. With this being a manipulative move lower just to tag this gap, rally higher, tag it there. So let's go ahead and jump into the 15-minute chart because, to be honest, for this setup, I did not look from the 4-hour, hourly. I just went straight to the 15, and I'll show you why. So right off the bat, we can see Friday's low is going to be an area of interest, and if we want to spin back the clock a little bit, this is what we're looking at from midnight on. So if we go ahead and throw the time zones on, we see midnight, rally higher, not optimal, and then the steep sell-off all the way below Asia. So we had a bit of a sweep on both sides of this Asia range, London being a protraction, a bit all over the place. So as far as daily profiles, we didn't really have much to work with. But what I was interested in when I look back was this one gap right here. This right here is your Reaper inverse fair value gap. And what makes it a Reaper, you might ask? What makes this thing so special? Why should I even care? Am I going to see this ever again? Short answer is yes, but not often. So, and the ultimate answer is why do you need to know this? Is because when you do see it, you go, oh, that's that one thing that I thought I would never use, and you have a way to use it. So here's the Reaper. We have a low, we have a gap, and we have a high. This violates the previous low on the next one. So the idea is low, high, and then you make the lower low right here. So these two, this low and this low. Basically, with the gap, it just invalidates that low right there. And then when it reclaims it, you can look at that in the future to be a potential area of support. Same idea works if you're looking at resistance, but the reason why this works, in my opinion, is because most people expect these things to hold. And when they don't, that's a trap. And then when they reclaim, you're like, okay, so now this thing's completely worthless. And people kind of discount it. So the whole idea of a fair value gap is that no matter how much time has transpired, no matter if it's been filled or unfilled, these levels tend to be reactive. That's just how they work. So heading into today, how could you have traded this? I mean, technically, you could have just traded off the 15 if that's something that fits your leverage, or if you wanted to use micros. I don't prefer to do that. I don't prefer to take like an unconfirmed entry. I would look at the lower time frame. So if we go ahead and hop out of here, we can go ahead and drop to the 5, and you see some early reaction here, and you see a rally, right? And you could have maybe taken this 5-minute entry and targeted some internal range liquidity. So I marked out this highs, but you could have used midnight open. You could have used a fib. You could have targeted one of these fibs. I mean, we see that they held as a decent area to exit. But ultimately, we're just going to stick with that blue line. It kind of represents a good amount of the potential areas where you could have exited. So when we look at the 1 minute, what do we have? We have our 2 unconfirmed entries. These offer obviously the greatest upside, but where are you putting your risk? So the risk reward's a little skewed there. As far as the 1 minute entry goes, we do have a 1 minute gap right here. We have the same gap on the 30 second as well. It looks a little bit differently. We have a gap right here. So you could have entered it in a number of places. You could have entered here, you could have entered here, you could have entered in this gap, ultimately targeting that high. Or later in the session, we see that we actually had another possible opportunity using this same logic with Friday's low, as well as the Reaper inverse fair value gap that overlaps. So we had this, and then we had all of this area. So as far as directional bias, the day was likely to be a range just given the location on the daily, but trading the intraday volatility using a high conviction area of interest, you could have taken multiple long setups using this new PD array that has just been explained. So hope you got something out of this video. If you enjoy, just let me know down below, share the video, like it, do your thing, and until next time, later.